Let's take a look at all things money matters now. The Johannesburg Stock Exchange starts the week on the back foot after the U.S. warned that military conflict between Russia and Ukraine may be imminent. So the warning has rippled through global equity markets, but boosted oil prices to fresh 7-year highs. Petri Redelinghuys is the trader and founder of Herenya Capital Advisors. He joins us for the latest moves at midday trade. So are the markets feeling the love or showing love at home, at least at this hour? Petri, hello.
Morning. Well, good afternoon, I think. And I guess that depends on where you look, right? If you're a Sasol shareholder today, you're probably smiling. This share doing relatively well. I mean, it's up somewhere around, I don't want to lie to you, but it is up somewhere around 5% for the day, right? So it's not a bad return for them. But, of course, that is on the back of a considerably higher oil price, which we see started rallying sort of late on Thursday and on Friday in particular. It had a really strong day, and this is obviously on those potential conflict, Russia invading Ukraine sort of fears. The rest of the market is not doing that well, though. Risk off, right? There's quite a bit of fear around what's going to be happening this week. We do have an interest rate decision from the Fed. People are expecting as much as a 75 basis points or 0.75% rise in interest rates in the U.S. And now that, I think, is somewhat unlikely, but the market is somewhat fearful of that. So obviously one has to be relatively defensive and positioned for that type of stuff, and we can see that markets are essentially cooling off on the back of that. And we don't really yet know, how this turns out. There's a lot of talk about Russia might invade Ukraine, but they haven't yet. And there's a lot of talk around, well, we're going to get really sharp, drastic interest rate hikes in the U.S., which we haven't seen yet. But both of these things are sort of expected for this week. And on the back of that, markets really starting on the back foot.
Let's take a look or explore the impact of Ukraine-Russia relations and the impact on the rand. It looks to have paused its rally at last glance. Will the resilience be tested?
I think we'll have to wait and see what happens here, right? So if there is a sort of conflict situation, so we've got a double-pronged risk, right? So if this conflict sort of erupts and we see a sort of very brief invasion of Ukraine or whatever the case is, I'm not sure that that's going to be particularly negative for us as in terms of, our currency. I think the bigger risk for us is what the U.S. does with interest rate hikes, right? The downside for us, I guess, in both scenarios is if there is a flight to safety, if people, we've been seeing a bit of a rotation away from these sort of mega cap companies and the growth companies that have been doing so well over the last, arguably a decade. And we're seeing that rotation into value stocks and emerging markets in particular. Like if you track inflows into U.S. or into emerging markets over the last 2 weeks, it's really, really large numbers that emerging markets have been benefiting from general sort of risk-on sentiment, right? And of course, the rand is a beneficiary of that as money flows into the country. So if there's quite a bit of fear around that and we see a reversal of that flow and people sort of run to safety, gold is going to do really well, but so is the U.S. dollar. Right, so we might see the rand come under some pressure for that. At this stage, though, I mean, the U.S. is saying that they've got all this proof that Russia is about to invade, none of which they're managing to disclose to the public. And then you have the Russians saying, well, we're not planning on invading at all. We promise we're not doing it. And then you've got all this, video evidence of tanks and helicopters flying towards the border. So exactly what's happening, I don't know, right? And we'll have to just kind of wait and see how it unfolds. For now, remain defensive, I guess, is the best posture you could take for your portfolio.
Fair enough. Dis-Chem Pharmacies have published their trading update for the 21 weeks to the 26th of January 2022. What's happening with those numbers?
Those numbers were a bit disappointing. I think the market expected quite a bit more from them, and we can see that the way that they're sort of responding with the share price being down around the 4% mark on the day, trading 35 Rand 96 at this stage. I think, one of the things that they cite that their sort of revenues are slightly lower than what was anticipated, I guess, is basically because people's patterns or behavior is going back to normal. They're returning to shopping malls. They're returning to regular regular life, and they're not necessarily, spending as much time in the pharmacy. There's not as many health concerns. Nobody's queuing up to take COVID tests anymore, and that is obviously starting to affect Dis-Chem. Dis-Chem was one of those companies that really benefited from the pandemic and the lockdown and all that sort of situation that unfolded for 2 years. And now we're starting to see the world starting to normalize. Regulations are easing up in terms of lockdowns. Not as many people are too worried about COVID anymore. Omicron is not so severe. And all of those things is sort of bringing back the normalization of, our behavior. And unfortunately, that's feeding through to slightly lower profit for the likes of Disco.
ARB Holdings, they've also posted their interim results. How did they perform? They flagged a profit hit from July's riots. Did it reflect?
Yeah, so the share price not really that reactive. It's trading at R7.70. It was the last time it traded. It's not one of the world's most liquid companies, if you will, at least from a trading perspective. So it's not something that we cover too closely. But what was quite interesting to note is that profit is slightly down, although all other metrics, profit is slightly higher, although all other metrics of earnings is slightly low. So if you look at headline earnings per share, that's slightly down, but operating profit and operating margin is up. Where they really got hit, which they pointed out in the SENS articles they put out today, is obviously recovering from those July riots last year. And I think that goes to show with how long the impact is of these types of events, right? I mean, that was almost a year ago. And still today, the impact of that is being felt. So I guess we look forward to the coming year where we, quote unquote, go back to normal and have a life with less sort of travel restrictions and that type of thing, so we can come out of this post-COVID sort of era. And hopefully, there's no real political turmoil, so that we can actually just have a stable operating environment for the next year. It would be really great to see how these companies recover.
Petri Redelinghuys is the founder of Herenya Capital. As always, a pleasure.